we will discuss this topic, which is a very hot topic, uh, that the Silicon Valley Bank has gone bankrupt, and we will discuss whether it is a risk management failure. Regulators are so stringent these days about risk management, especially about disclosure of important numbers, whether it's capital numbers or your provision numbers, or disclosure about various things related to stress testing. And they are also putting a lot of emphasis on using data for that. So almost all the banks are having data analytics teams building models for risk management, right? For various forms of risk management, whether it's credit risk management, liquidity risk management, interest rate risk management, market risk management, you name it, operational risk management, etc., etc. But despite that, we have seen banks going bankrupt in the past. But the last 10 years were actually okay, because there were not many banks that went bankrupt in the last 10 to 15 years. I think the last time there was a major bank that went bankrupt was back in 2008. And in the US, Silicon Valley Bank bankruptcy is the second biggest banking bankruptcy in their history. Last time it was Lehman Brothers, but SVB is the second biggest. Like, it's not as big as Lehman Brothers, but it's still quite uh, of decent size. It is the 16th biggest, if I'm not wrong, bank in the US. So let's discuss about this. We'll talk about a bit about the story, how it unfolded. Um, okay, and then we'll take it from there as to okay, what exactly was lacking, whether there was proper credit risk or any form of risk management there or not, whether there was liquidity risk management there or not, why Federal Reserve was not very strict about the disclosures for this particular bank. We'll discuss a lot about that. Okay. So this bank
Sure.
was founded in 1983. So it is not a very old bank, but it's not a very new bank either. So it's not a fintech startup. Right? It's not a new as fintech startup. It is a bank that is not very old either. Not like JP Morgan Chase or Goldman Sachs or Morgan Stanley. And before it went bankrupt, it was the 16th largest bank in the US, right? In the US, there are so many banks. So even if it is 16th largest, it is still probably a very large bank. Not extremely one, like, but still decent size, right? It had international operations. It is not a very local bank, serving only the local customers in few cities or few towns in the US. It has international operations in Europe and in Asia as well, in India as well. And it is a state chartered bank. I didn't know that actually. When I was researching about this, I got to know that it's a state chartered bank. It was regulated by the state government. It was in the California state, so it was regulated by the California Department of Financial Protection and Innovation. I wasn't aware that in the United States they have state regulators as well for banks, unlike in the UK. Well, in the UK there are no states, but in India, for example, we don't have state regulators for banks. Right, our regulator is just a
Right.
central regulator, which is the Reserve Bank. Okay.
Yes, yes.
And this bank, right, is a very different bank than many other banks. Unlike other banks that serve all kinds of customers, this bank was very focused on the startups. Most of the customers were the startups or the venture capital firms. Okay, that's the name suggests that it's a company or it's a bank that is mainly for the Silicon Valley, because the name is Silicon Valley Bank. So it was primarily targeting the tech startups in the Silicon Valley. That's how it started, and then they started their operations in uh, other countries as well. For example, they have an operation in Bangalore in India. They have operation in London, but they are catering to mostly the startups. and the venture capital firms. Okay, not there are not too many retail customers. Okay, so in that way, it's less of a concern, especially for the global, for the economy in general. But we will see whether that is actually the case or not. Because most people are saying that no, it's not big of a concern because retail customers are not affected by this. But that's actually not true because they will be indirectly impacted by this. And we will talk about that because if startups fail, right, many people will lose jobs, and that will have impact on the economy in general, right? So there will be a systemic impact. So there will be many knock-on effects of this issue. Okay, we will dive into the details of it. We will dive into the details as to what regulatory requirements were there in place for this particular bank, why things uh, went so bad for this particular bank, even though despite having the corona crisis 2 years back, major banks in the world were quite uh, resilient to the crisis, right? Corona crisis. I think in part because of the support they received from the governments, but I think there are other reasons also. Regulatory work, regulatory disclosure, regulatory requirements are a lot more stringent in the last 10 years compared to the ones in place during 2008 crisis, right? So most of the banks are relatively doing well compared to their situation in 2008. However, we see this particular bank going bankrupt. So that's very interesting case study. Whether this is just this is just a beginning, and we will see more banks going through that route. I don't know, right? It's still a question. I was watching some of these videos on YouTube, CNBC, and Financial Times, and what they have published is that that question is still a question, right? It's still not sure as to whether uh, other banks are also exposed to this. It's not evident yet. Maybe over some period of time, some maybe a few weeks time or a few months time, we'll see more banks going back. You never know. But this is in a nutshell about the Silicon Valley Bank, what it does, and a bit about this particular bank. Okay, why this bank collapsed? Because of the liquidity crunch. They didn't have money to pay the depositors, and there were so many people wanting to uh, withdraw money from this bank, and they simply didn't have cash. You understood the point, Vishnu? This is a classic example of liquidity crisis or liquidity risk, where more number of people, I mean, you have more demand for withdrawal of the money and you don't have cash on your balance sheet to pay the money to your depositors, right? And it started with losses in 2002 due to increased interest rates. Um, as you know, the Federal Reserve has
So
increased interest
I
rate.
think Pani, I think it's
Yeah.
important to highlight this point
Yeah.
that our viewers that how was this bank, since the major customer of this bank were actually the VCs and the startup
Right.
companies.
Right.
Then I know how is the increase in interest rate actually causing this bank to lose a lot of money. So maybe if you
Yeah.
could just
Yeah, yeah, yeah. I
explain
can. I
more about that part so that it is clear to our viewers.
Yes, yes. So the thing is that when interest rates are high, right?
Hmm.
First of all, if you have deposits in your bank account, you have to pay more interest to your
Correct,
customers,
correct.
right?
Yes.
So that is your outflow. Your cash outflow is more, right? That's one
Hmm.
thing. The second thing is that which is more of a recent phenomenon. So losses started because of that, right? Because Silicon Valley Bank had to pay more interest to its customers. Okay,
Hmm.
there is a direct way. There is also an indirect way, right? Banks normally fund using external funds. Also, okay, so the cost of capital also increases when the interest rates are high. Okay, so that is the second indirect way of impacting your profitability. Okay, so that's the second
Yes.
point. Third point, which is more of a recent phenomenon, which is that When interest rates are very high, startups do not get easy funding, easy money. And this is something we have seen in the last 1 year or so. Right before that, during the 2020-21 period, we saw many startups getting funded. Like there was a lot of money at their disposal, but that is
Right.
no longer
Yes.
the case, right? So they
Mm,
have to,
mm.
but these companies have to pay salaries to their employees, right?
Right. Yes. Mm, mm.
So they
Yes.
need money, right? They need to withdraw money from this bank because they are the one actually who are depositing money with this bank, right? And they want money back, right? And that is creating an issue with
So I think
liquidity crunch.
one clarification, Pani, here is that since these, the big corporates, right,
Yeah.
who were the primary customer of this bank,
Yeah.
generally they have this current account kind of, the relationship where they
Yeah.
deposit the money, but generally they don't get a lot of, interest from those money,
Yeah.
whatever they keep deposit,
Right.
other than, the saving account where you have
Right.
to have some kind of, interest assigned to your account and you have
Right.
to
Right.
pay.
Yeah. Right.
But the thing is that I think since these big corporates, right, who were the primary customers, so I think
Not
the
big corporates. These not all of
uh,
them are big corporates.
only
Actually,
the
many
I think the
startups also.
let's call it the startup. Yes, yes, yes,
Yeah.
yes. Even the startup, right? So if they're
Mm.
maintaining some kind of current account or checking accounts, the
Yeah.
interest I think outgo for the bank will be much lesser in my view.
I agree, I
And
agree. But there are
yeah,
also other things. For example, you can have fixed deposit also, right? You can have
yes,
a
yes, yes.
fixed deposit also. If let's say a startup has received 10 million,
Hmm.
right? A Bangalore-based startup has received 10 million funding, and it
Hmm.
doesn't have immediate requirement of funds. So what it would do is that it would put that in the saving account, and
Correct. Yes.
and in India, the interest rate is now 7%, almost 7%,
Correct.
right?
Hmm.
So, to pay 7% interest to your customers is not always easy, right? So actually the profitability got impacted because of that. And it's not in the last few weeks, it has been happening for the last 1 year or so, right? Because the interest rate increased in 2022. However, the liquidity crisis is the bigger concern now. Liquidity crisis because, this particular bank was in search of investors, to raise funds,
Hmm.
and that
Correct. Correct.
was a bit of a concern that why all of a sudden this bank is searching investors for funding. So many of
I think
look,
that
wait a
was
minute,
the
wait a
trigger
minute.
point for them.
Exactly. That was a trigger point. So people sensed that something is wrong with this bank.
Correct.
And
Yes. Yes.
many VC firms actually, they started telling their companies, the companies where
Hmm.
they have invested in, that please move your funds from this bank to other banks because it seems that this bank is not in good position.
Good position. Yeah. Yeah.
And because of the social media, right, the news runs travels very fast, right?
Yes.
And
Yes.
so many banks, many startups are now interested to withdraw money. That's exactly what happened a couple of days back. Um I think customers withdraw 42 billion deposits in just 2 days, 2 or 3 days,
That's a
something like that,
some.
right? So that's a
Yes.
huge amount of money withdrawal
Yes.
within a couple of days' time. That resulted in liquidity crisis. That means so the bank is not ready to give money to the depositors because it doesn't have money, right?
So I think the Pani, so if we have to say this in the simple terms, I mean forget about this SVB. Even if there is any other bank which is really strong, have a really good
Yeah,
kind of liquidity,
yeah,
if there is similar kind of situation, say that
right,
90% of that bank customer come to ask their
right.
deposit, any bank
Yeah.
can collapse in that situation, right?
In that
So
situation, it might
yeah,
collapse, but you have also
yes,
capital buffer for that, right?
correct.
You have capital buffer, and
Hmm.
first of all, yeah, it's a very unlikely scenario where 90% of customers will come to you for their money.
Yeah, that's the
Uh,
basic assumption of banking to actually function, right?
exactly.
That all your customer will not come. I think if this bank had lot of retail customer, let's say, right, the
Mhm.
small value transactor who are just having a small saving account with them. Do you think that this bank might not have failed like the way it failed in 2 days? Just since the big
Yeah.
companies started pulling the money in a big way, right? So you have only few people having the most of the deposit in your company, let's say 100 or
Right.
200. Right? If all 200 comes, you are gone. Think about
Right.
a case where you have 1 million customers, right? The 1 million cannot come in one day to you, asking for the money to be, credited back. So, since the concentration risk was also there, right? Your customer are very, limited. So, and they are
Yeah.
really informed customer, startup and VCs, very informed customer. They know what is going on with you. And as soon as they realize that there is something wrong with you, they immediately started pulling out their money.
Yeah.
Right?
That is true. That is true. That is true that if it was a more of a retail bank, then
Yeah.
things would have been different actually. I mean, we wouldn't expect that retail customers would withdraw 40
Yeah.
billion in couple of days time. That is a very unlikely scenario. But also note that
Yes.
if it was a retail bank,
Hmm.
there would have been higher or more stringent regulation for this bank.
Yes, 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 yes.
Okay.
I think one more point, Pani, I just wanted to bring here is
Sure.
that since a lot of people are talking about this Lehman Brother crash, right? And
Yeah.
they are
Yeah.
trying to link it with this SVB collapse. So I
Right.
think it is also important to highlight to our viewers that how this failure is very different from the Lehman Brothers failure, right?
We'll talk about that
So
actually in the
yeah,
next few
sure.
slides. We'll talk about that.
Yes,
It in many ways it's different. Okay, banking
yes.
in 2000 was quite different compared to banking right now. So Lehman Brothers crash was quite different in that way, and it wasn't just Lehman Brothers, right? Many other banks were also exposed to this.
Correct.
But it's a bit too early to say that. Maybe other banks are also having similar issues. You never know. Only time will tell. But okay, we will also draw some parallels between Lehman Brothers crisis and this particular crisis. Okay. By the way, it's
Sure.
the largest U.S. banking failure since 2008. And 2008 Lehman Brothers failed, and in last 15 years, so there was no such banking failure, and this is the first one. But
So
few
when
more
you're saying
might.
it is second largest, it
Mhm.
means that the Lehman Brothers is the biggest failure
Yes,
till now.
yes, yes,
Oh,
yes.
okay.
Yeah. Here is, this was an article I came across on CNBC that how second biggest bank collapse in the US history happened in just 48 hours. So that's what I was mentioned, right? So
Yes.
people withdraw money in just in 2 days. In 48 hours, people wanted to withdraw 42 billion deposits from their account, this bank, right? And I think any bank will not be able to, well,
Survive.
many banks will be able to survive, but I think a
Yes.
mid-sized bank will never be able to survive if such thing happen,
Mm.
right? But I think there's a reason behind it also, right? There were some signals already that this bank is in trouble. Okay, we move to see the stock market crash. Well, this is the stock price of this particular bank. It was, I think, it went all the way up to 700 plus during 2021, and it went down to some 265 or something. Last week it was 265, and this week the share price is zero.
But I
Okay.
think the collapse, this I think the fall in the stock price is actually somewhere around September or 2020, right? When you see it is reaching somewhere around to 800, and then
That's
it's continuously dropped. Yeah.
but it's not just because of the issues with the bank, right? Because this is a common thing that we have seen for all the stocks, US stocks, right? Tech stocks were doing bad, so it is
But
obvious
but
that
if you compare from 800 to reaching somewhere around 200, it's a huge fall, don't you think?
well,
Right?
it has happened to, let's
Like
say,
almost like 70% fall. Yeah. Yeah.
it has happened to Netflix and Facebook and Tesla as well.
Yeah.
But what is so interesting is that in 2 days time, it went
Mm.
to zero. right? I think in India, Yes Bank salary is still not zero, right? It's some 13 rupees
Yes,
or
yes.
15
It is,
rupees.
I think, still trading some 16 rupees or something. Yeah.
Yes, so it was very interesting that, but Yes Bank wasn't, fully bankrupt per se, right?
Correct.
There was a deal made between State Bank of India. That's the reason why it was saved.
Yes. It survived. Yes.
Yeah, right. So this is the market crash. S&P 500 is last week has gone down by 5%. So you never know, right? There may be some knock-on effect on the general economy because of this, but only time will tell us. And there may be other banks also in a similar situation, especially the smaller ones, right? And very specialized banks who are exposed to tech startups. Because this thing also happened during 2000 and 2001 during the dot-com crisis, dot-com boom, where many banks had exposure to the tech companies that of that time, and the market burst, and it was an issue, but it wasn't that big of a financial crisis as such, not like that of 2008, but it was still a crisis nevertheless. Okay. So what are the immediate impacts expected, right? So the thing is that startups may not be able to pay the salaries of their employees, and that has already happened. I saw messages on LinkedIn. Many CEOs have made posts on LinkedIn that they're not able to pay salaries because they do not have the money. Actually, the money was with the bank. They're not able to withdraw money. And also, one important thing to mention here is that the deposits were not secured. There was no insurance. 90% of the
That's true.
deposits, there was no insurance.
Actually, I was coming to this point, given that this insurance part has become really important, even in the
Yes.
Indian banking industry, you see that government has recently changed that regulation in which earlier I think the default insurance amount was I think 1 lakh rupees for us. Now that has been increased to 5 lakh. So any deposit greater than 5 lakh, you might not get, but if it is under 5 lakh, then you are safe. Even if bank
Right.
collapse, you will be able to get that money. Yeah.
Right. Right.
So it came in my mind whether they have this money insured, and I think it's
Yeah.
good to
90%
reach
of the
this point.
cases, for 90% of the
Okay.
deposits, there is no insurance. And
Okay. So I think
you
it's
might
not
see.
regulated by Fed that you need to have certain kind of insurance there in US.
Well, I'm not sure about that.
Oh.
Again, because these are big funds, right? They have
Hmm.
lots of money. It's not like they're depositing some 50,000 or $10,000, right? Most of these,
Yes.
most of the customers are depositing well over 100K,
Hmm.
many in millions, right? So that is a huge sum of money, and no government will insure that sort of money, right? In the UK also, it's I think, yeah, up to 100K or something like that insurances. So we might see impact on the job market, for example. There may be hiring freeze, like startups won't be. They're already in trouble by the way. They're not able to raise money because of the economic scenario, because of the inflation, higher interest rate, etc., etc. And this is more of a double whammy, right?
Hmm.
So hiring freeze we
So
can expect. It
I
may
think
have a
just to name one company which was actually directly impacted by this
it's not yet clear.
SBB.
It's not yet clear. I think today we got to know that many Bangalore-based startups will get impacted. They
Yes,
had
yes. So I just wanted to give you some names here. So there is a big player, okay, Nazara Technologies, which operates in gaming industry. So they create, gaming apps. So two
Hmm.
of their subsidiary had their money deposited in
Okay.
SBB, and
Okay.
they actually clarified today that their subsidiary are not able to withdraw that money because of this failure. So
Okay.
there might be impact. Yeah, they informed the regulators actually the exchanges today in India.
Okay. 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 That's good to know.
Yeah.
I think the SBP had an exposure to Paytm.
Oh,
Uh,
okay.
but I think before the collapse, I think the SBP had sold the shares of Paytm. I think this was confirmed by the Paytm CEO, Vijay Sharma today. So I'm sure many other companies
Yes, yes,
high
yes.
exposure
I think
business, not
in
just
a day
one.
or two, that list will come actually. The
Yeah,
long list
exactly.
will come. Yeah.
Yeah,
Slowly they are confirming, but definitely it will come, especially for those companies which are listed in share market.
yeah.
They
Right.
will come quicker because they will be
Yeah.
mandated to share those information to,
Exactly.
yeah.
Exactly. The listed companies will have to
Mm.
share this information to
Yes,
the investors, but maybe
yes, yes.
the private companies and the startups, they may not
Yeah,
have
they
to
are not
do
bound
that,
by
but
those rules.
eventually they will disclose also these things,
Mm.
just for sake of transparency, right?
Yes, yes.
And question is whether other banks also in similar situation. I think this will, I mean, the governments across the globe, especially in Western Europe and US, they will take cognizance of this situation. They will assess the situation, and they will then, yeah, take necessary steps to avoid a financial crisis type situation like we had in 2008, and God forbid that doesn't happen again. Okay. So I think our focus is more on the risk management at SB. Was there any risk management team there? And you know
Mm.
what? There was an absence of full-time CRO, Chief Risk Officer, for the last 1 year. That's very interesting, right? It's a board level
Yes,
position, right? It's impossible
yes.
that a bank is surviving without a CRO, right? That cannot be even imagined in the European Union or in the UK. I don't know how Fed was so lenient with this bank that this bank didn't have a chief risk officer without for more than a year. And then this bank was not under CCAR stress test. Right? So it was waived for this bank because of the smaller balance sheet. And you know what happened? The CEO of this bank, um, knowingly, I mean, deliberately, he made sure that the balance sheet is within the limit of or within the threshold, so that it doesn't have to do a proper CCAR stress test. You know, I think that already gave an indication that this bank is not operating in a regulatory compliant way, and there were issues
Mm.
with. I don't know why these things were not highlighted by the media, or there was nothing really about this. Even though it was a
So I
traded
think
company, it was a traded
yeah.
company. Stock investors were there. So investors may
Mm.
not be directly impacted because they were not retail depositors, but
Mm.
people had bought shares, right?
Correct.
So from
Yes,
that
yes,
point of view, many people will get impacted, right? And
yes.
the bank spent more than half a million, I think, in 2015 for lobbying. Okay, for lobbying and for
Mm.
what? To not to be under stringent capital regulations. And that was very
Yes.
interesting that a bank of this size, 16th biggest bank, is spending money
Mm.
to lobby in the government, White House, just to not to be under stringent capital regulation. So that really said something about this particular bank. There's something wrong. Big banks, well, lobbying is very normal there in the US, but for this particular reason, it's questionable. If the list of banks who are doing the CCAR, this is the 2022, the latest one, and I don't see this particular bank, this particular list. Many foreign banks are even there, like UBS and and Deutsche Bank, but not this particular bank, which is quite interesting. Okay. Um, this is a document I found on Federal Reserve's website, which says large bank capital requirements. So these regulations, Indian regulations, are applicable only to very large banks and not to mid-sized banks. But it's a question now. Many people are questioning this, that these requirements should also be there for these mid-sized banks as well, not just big banks, right? All the
Yes.
stress testing scenarios, because directly or indirectly, this will have impact on the economy. Right? It's not just the big banks will lose. And what is the issue, and why a relatively smaller bank cannot do these things? Right? These disclosure requirements should be mandated by Fed. I think there will be some level of soul searching after this event. Um,
Mm.
okay, let's see. And this is more of a liquidity stress testing type situation, right? Where you see that the bank has run out of liquidity. Okay. So we'd like to understand a bit about liquidity stress test. For example, what is liquidity stress test? It's basically the test. It's a test to test the ability of banks to meet near-term payment obligations, right? Whether the bank is able to pay money to the depositors and all. So that's an obligation, right? Um, and if that is not happening, then the bank is in trouble and there is a liquidity crisis. And you have in Basel III, actually, there are some requirements in place. For example, the bank has to always assess its liquidity coverage ratio, LCR, and the NSFR. LCR is liquidity coverage ratio, which is more of a short-term liquidity requirement. It's a metric that measures banks' ability to fulfill short-term liquidity requirements, and NSFR is more for long-term. Um, Yeah, and such liquidity crisis can happen in many situations, right? It could happen during runoff. It could happen because the haircut has increased. That means the collateral value has gone down. Um, the closure of interbank credit market, right? If this bank is going out to the market to borrow money from other banks, I don't think banks will be willing to pay money, right, to this bank because it's already in trouble. So in situations where interbank lending credit market is difficult, that you could also have such a scenario. And payment settlement for infrastructure failure, IT systems or some natural calamity. So these scenarios could have situations where bank would end up having liquidity crisis. And this is one of the situations where it's more of a runoff actually, that it doesn't have cash. This is Lehman Brothers. We're comparing Lehman Brothers with this, right? So Lehman Brothers had a very good liquidity position back in 2000. Yeah, by decent situation by 2008 July, but in 2 months time, 2 to 3 months time, it went all the down, right? You see the downward trend. And by 2000, I think 25th of September 2008, it it ran out of cash, and that's when there was a liquidity crisis and it was declared bankrupt. The US government did not come forward to save the bank. I think there was a consortium of banks who wanted to buy, but I think they were not in position because they were also in trouble. I think JP Morgan, Morgan Stanley, a few other private banks wanted, but I think they were already in trouble, so they pulled back.
I think it was also a point that it was not a small bank like
This was a very
SBI.
big
It was a
bank,
big
yeah.
bank. Yeah, very big bank. It was very difficult for others also to actually buy because actually the problem was multifold and many people were facing the hit at
Yeah,
that
yeah,
time.
yeah. So a bit more about the Basel metrics. So liquidity coverage ratio, which
So I
is
think Pani, before we actually go to Basel metric part, so one thing which we should actually try to differentiate it between the Lehman Brothers failure and this bank failure is that it used to be called a subprime lending crisis. So maybe you just want to throw a little bit of light on there that it was the reverse kind of problem. They were actually facing pressure from the loan side, which they had given to the I think
it was more of
subprime
a credit
customers.
crisis.
Yeah.
It was
Yes,
more of a
exactly. That's
credit
the point I
crisis,
wanted.
but
Yes.
it was also a liquidity crisis. It was a
Yes.
mix of liquidity and credit crisis.
Yes.
They
Yes.
had because they were also in secondary market and right, trading market. They were selling some mortgage-backed securities and all. So in those scenarios, you have some positions, and in some scenarios you have to pay money, and they didn't have the cash to pay. So it started with credit crisis, but it ended up as a liquidity crisis. Okay.
Yeah, because eventually you'll have to pay back to your customer, right? And at the
Exactly.
end you will become a failure, you'll fail to pay the money. So it will become a credit crisis at the
या
end.
ये और एक बार स्टार्ट करते हैं खत्म हो गया अभी 1 मिनट में खत्म हो जाएगा ठीक है
ओके आई थिंक बस दो तीन ही स्लाइड है
हाँ अब
दो
10 मिनट लगेगा 10 मिनट
हाँ बिल्कुल बिल्कुल लेट्स
ठीक है
अभी मेरा ये भी काम करने लगा कैमरा
हाँ अच्छा ठीक है so we were discussing about the Basel metrics right
Yes.
so there are some disclosure requirements there in Basel 3 okay for the banks okay there are two metrics actually very famous I think they're already in place for a couple of years already. I think from 2015 onwards, these requirements are in place. One is the LCR, liquidity coverage ratio. So that's one matrix used. It has to be over 100%. So how LCR is calculated is the total net cash flow amount divided by high quality liquid asset amount. Okay. So net cash flow, I mean how much money the bank is expecting uh, as as part of withdrawal, okay, or net cash flow, and based divided to the high quality liquid asset amount. And there are some rules as to how to sort of calculate high quality liquid asset amount. Okay, it's like your tier one capital type. So only the good quality assets are counted as high liquid assets. For example, the money you have lent to governments or other financial institutions. That's of good quality liquid asset, not like to some corporates or something, right? Or corporate SMEs. So LCR is calculated by dividing banks' high quality liquid assets and its total net cash flow over 30 days stress period. So in the next 30 days, how much money the bank is expecting as a net cash flow, and to that of its entire liquidity position, as in high quality liquid asset amount. And that
Yeah, so
ratio should
this
be more than 100%.
hmm. So this 30-day period, right?
Yeah, yeah,
It must be coming from some historical, I think, evidences what bank might have.
yeah,
How there, because they are predicting in future that okay, in next 30 days I'm
yeah.
expecting that this much on average cash flow I'm expecting. So that
Because in
number.
longer term, right? In longer
Hmm,
term is very
hmm,
difficult to predict, right?
correct. Yes.
For longer
Hmm,
term, it's very difficult to
hmm,
predict actually, right? But for a shorter
hmm,
term, you can predict,
hmm,
or you can predict with a better accuracy. Okay. I don't know exactly why this 30 as a threshold. There
hmm,
must be some reason behind it, but I don't think you can predict your liquidity position with higher accuracy for like for 1 year period, 2 year period, 3 year period. By the way, this is a short-term metrics. This is a metrics used for
hmm.
short-term to assess liquidity situation in short term. There is also another one used for the long term.
Okay.
It's called NSFR. So it's about
Hmm.
assessing the resilience over a longer time horizon by creating incentives for
Correct.
banks to fund their activities with more stable source of funding. That means this matrix is somewhat less reliable, but what is important is that here the emphasis is more about the bank should fund uh, using good stable sources of funding, not like some cheap money it got and then it is giving loans to all kinds of companies, right? So there you have a checks and balance, right, on a longer term stability, right? And NSFR should also be more than 100%. It's calculated as like this: total available stable funding divided to total required stable funding. Um, Okay. So the point here is that okay, the banks should not use cheap availability of capital just to give loans to anyone, right? So the source of funding should be stable in that way. Okay. But despite these requirements, this particular bank actually went bankrupt. It's a question mark whether they were calculating these numbers and whether they were sharing this number with the Federal Reserve or not. Okay. Well, many Basel rules are not followed by Federal Reserve. They have their own. So maybe this may have been overlooked. I don't know, but I think this is also a point of research as to why um, these things were not taken into account very stringently. In good
Sure.
times, actually, banks normally what they do is that they expand their balance sheet, and that's exactly happened in 2008 and leading up to 2008. In the financial
Hmm.
crisis, because there was cheap money, availability of cheap money, and the banks went on lending to subprime customers who were not very credit worthy, but banks were ready to fund them because they were thinking that the house prices are anyway going up and
Hmm.
collateral is available, so why not fund them? And the worst thing that happened was that story was believed by many other banks who actually bought the mortgage-backed securities at a at a premium price. The value of
Hmm.
these securities were actually much lower than that was estimated by these banks. And when the crisis happened, these assets had no um, yeah, no value. So there was a huge. So if you sell these assets, also you don't get money. And
Correct, correct.
then in that point in time, if your customers are coming to you to withdraw money, right?
Hmm.
And you sell your asset, you sell at a discount, so you don't have enough liquidity to pay your depositors, and that's a classic
Correct.
example of liquidity crisis. Okay. Um, okay, so we discussed about the BCBS rules, right? The Basel uh,
Hmm.
rules, and why, despite having these rules and requirements, the banking crisis is still happening, right? Is this because of the political reason? Question is why there was not even a CRO in this bank, right? It's so
Hmm.
funny as to without a chief risk officer, this bank was functioning for over a year, and there was uh, no flagging by the senior management or board or by the regulator. Question mark. There are many other questions. For example, will this have bigger impact? And bigger impact beyond the startups, beyond the venture capital. Because okay, the venture capitalists are rich people. They have lots of money. They have earned money, so nobody cares if high net worth individuals lose money. But that is not the end of the story, right? It will
Correct,
have
yes.
knock-on effect on the general economy. Many people will lose jobs.
Yes.
Startups will lose jobs. So it is very unlikely that the impact will be only limited to startups and VCs. Um, so I think more and more tech companies will suffer, and they are already suffering because of the interest rate hike, and it will only get worse for them if, uh, yeah, many of them cannot even withdraw their own money because, yeah, the bank is in trouble, right? This bank is in trouble. Question is, will more startups close? We have seen in the last 6 months, many startup and many even big tech firms have laid off many people, right? So will the layoff continue because of this? Will it get aggravated? Question mark. Another question will be what will be the impact on India? SBP, this particular bank was actually present. I didn't know that this is present in India. This was present in India. The bank no longer exists, so we have to use past tense. So, question is, how many Indian startups are exposed to this crisis? This assessment
Yeah.
is yet to be done. I don't think there is uh, any statement made by the government yet, or the finance ministry, or Reserve Bank of India, or SEBI, or you name it. But you will never know the accurate story about the private companies very well. But at least for the public companies, you will get
Correct.
the situation, right? So I think the bottom line here is that we are talking about using data, using all kinds of data, but also alternative data, using sophisticated algorithms, using very academic modeling techniques. But what matters at the end of the day is that if these things are not taken very seriously by the senior management, then the purpose is not going to be served, right? It is we will not see the results of the hard work done by the risk management team if the people sitting at the top they take these things seriously, and uh, without regulator enforcing uh, the board for all of these banks to take these things very strictly, uh, nothing will really happen because we have seen that happening in 2008. Many banks were in trouble because of this. I think despite having stringent rules and regulations in the last 10 years, more than 10 years now, with Ccar-Dfast in the US, but also more Basel regulatory requirements in European Union, UK, and other places, we still see this is happening. Although situation is much better, in my personal opinion. Although the actual situation will be known in few weeks or few months time maybe. But banks are in better shape. I would say. I was doing a video on Credit Suisse crisis a couple of months back, and I was looking at the capital tier one capital ratio for all the European banks. I think they're much better compared to what the situation was 10, 12, 13 years back. So in a way, at least the big banks are in a better shape. Maybe some of the smaller banks where regulations are less stringent, they might be in trouble. But it is anyways more much of a speculation. We will get to know the reality in maybe a couple of weeks time, right? So we have to stay
Yes.
right.
Yes.
Good, good discussion. I think we will also discuss topics related to not just about data science, right? We'll discuss topics related to also where data science is used for, whether it's whether it's security, cyber security, whether it's climate change, whether it's technology and advanced equipment development, whether it's risk management, whether it's scientific research. We will discuss a very broader area, right? Use of scientific techniques in different areas of, and because we both are economists, I think we can make sense of a variety of things where we can draw we can understand scientific details because of our background, education background, but at the same time we also can relate it to the society because economists are primarily social scientists, right? So good discussion. So thanks Vishnu, thanks for joining.
Thanks, Pani. See you next time.